I believe that the initial move, the downward correction, and the strength in the US dollar are actually terminal moves. In other words, they will be reversed. Trump, if you look at him and his personality and his history of borrowing money and never repaying his debt, it's actually very bullish for the gold price and for precious metals. So I would use, if I didn't have any gold, I have my gold already and I've had it for 40 years. But if I didn't have any gold, I would buy here on this correction. It's a gift of God.
Gold prices remained subdued after touching a 2-month low on Thursday, pressured by a rally in the US dollar. However, market sentiment remains cautiously optimistic, with traders expecting a possible December rate cut in response to the latest U.S. economic data. This rate outlook and other financial factors shape investor attention to gold as inflationary pressures increase. Gold is widely considered an effective hedge against inflation, as inflation erodes the purchasing power of money, thereby increasing demand for tangible assets like gold. Dr. Marc Faber, publisher of the Gloom Boom Doom report, sees the recent drop in gold prices and the stronger US dollar as temporary. He expects a reversal and views these conditions as opportunities. Faber cites former President Trump's history with debt as a positive sign for gold, suggesting it increases gold's long-term appeal. He encourages new investors to view the current price dip as a buying opportunity, as these pressures may soon shift. Investors are also awaiting insights from Federal Reserve Chair Jerome Powell's upcoming speech, which is expected to influence the gold market. Despite high anticipation, many analysts believe Powell may refrain from introducing new monetary policies in his address. Nevertheless, the speech is a critical focus for gold traders, as any hints toward future policy changes could impact inflation expectations and, subsequently, gold demand. Faber also notes that gold mining stocks, which traditionally outperform the metal itself during periods of price hikes, have underperformed this year. Historically, a 30% increase in gold prices has led to a roughly 100% rise in gold mining stocks. This underperformance is particularly evident among Canadian gold mining giants Kinross Gold and Barrick Gold, which were hit hard after gold prices dropped 2.6% following Trump's re-election. This decline erased some of the gains these stocks had made throughout the year, reflecting the broader market's cautious stance amid recent U.S. political and economic developments. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
My view would be that precious metals, of course, they've gone up. When I started to work in 1970, the price of gold was $35 an ounce. It's now 2,600, whatever. So it's up substantially, but if I then compare gold to the monetary expansion we had over the same period of time, and to the expansion of credit in the world, and to the expansion of the monetary base, then I think that gold and other precious metals are not terribly expensive. They're up. And the value of money has declined. But if I didn't have any gold, I think I would still buy here.
Buy today, even at these prices?
Yes.
Because
I think I will buy more in the next maybe week or 2 weeks. I mean, for me, it's surprising that equities, gold equities, the miners, have done as badly as they've done. But I've written about this repeatedly, and I kept on saying, the miners are not acting particularly well, you know, compared to the price of gold.
Yeah.
And I wonder why, and I don't have the precise answer, because normally, when the gold price goes up 30%, the miners go up 100% or something like this, but it hasn't happened yet. Now the gold bugs tell me it will happen. Who knows? Maybe if you look at the buying of gold, it's not by the individuals.
No.
Meaningfully. There's no mania in the gold market from individuals.
Yeah.
The buying, the accumulation has been in the hands of central banks. And maybe some rich individuals who say, okay, I have $1 billion. I also believe we are in a financial bubble and it's not sustainable and the deficits and this, that. I take 100 million and I put it in gold, physical gold. But on the individual level, there hasn't been much gambling in gold. But I suspect that when you look at asset prices and how they move, the problem with monetary inflation is that not all prices move at the same rate.
Yeah.
And what then happens is there are bubbles here, and then this bubble will deflate, like commercial properties in America, like volcanic eruptions in different countries.
Yeah.
And my view is the gold miners will probably move one day, but maybe not quite as much as the gold bulls or the bugs or whatever, as they expect.
Yeah. Okay.
And also, from my point of view, I want to explain why I favor physical gold over, say, mining stocks. I also have mining stocks, but not that much. The reason I own gold is that I believe the current financial system is going to collapse. It can go on, as I explained before in the case of Istanbul and Argentina, it can go on for a very long time. But I want to have some assets that are physical, which you cannot print. And it is true that you can't you can print bitcoins, but it's becoming more and more expensive.
Yeah, you have the
but you can have alternatives to bitcoins, other cryptocurrencies, whereas the alternatives to gold and silver and platinum are very limited.
During his campaign, former President Trump proposed up to 60% tariffs on Chinese imports, though he provided few specifics on which goods might be affected. Additionally, he suggested broader tariffs ranging from 10% to 20% on all imports, including those from close allies and trade partners. He vowed retaliatory taxes on any country that imposes levies on American-made products. These protectionist measures aim to boost American manufacturing but have sparked concerns about their broader economic impact. Dr. Marc Faber has criticized tariff policies, warning they may accelerate the decline of the U.S. economy. He argues that tariffs are counterproductive and can lead to increased money printing, which he believes would boost gold prices. By limiting free trade, these tariffs could weaken the U.S. position in global markets, hindering economic growth and diminishing the dollar's purchasing power. Spot gold prices recently declined nearly 7%, falling to $2,559.2 per ounce, as global markets reacted to Trump's election victory. This drop in gold prices, falling in 6 of the last 7 trading sessions, comes after a year of record-breaking milestones for the precious metal. Although short-term prices have dipped, Faber and other analysts see Trump's economic policies potentially fueling long-term gains for gold. The tariffs and projected economic effects may drive investors toward gold as a haven amid growing inflationary pressures and the specter of increased money printing. Let's get back to the interview.
I know many people. They were businessmen and successful businessmen. They went into the government and they tried to rationalize it. Not possible. It's very difficult.
Okay.
That I would emphasize. And number 2, the tariffs is a horrible economic measure. And it will probably accelerate the relative decline of the US vis-a-vis other countries in the world. And in my opinion, it will be negative for the US economy. It's not going to be positive. And it will necessitate more money printing because they have no other option. So actually, I think that of all the candidates, Trump is a favorable asset for the gold market. If you go to Istanbul or to Buenos Aires and nobody tells you, you wouldn't know that there is inflation of 80% or 100% and so forth. And the business functions, it goes on. So you can print money for a very long time, maybe 3 years, maybe 4 years, maybe six weeks, who knows. But the one thing is clear, what happens, and we've seen the start of this happening already for the last, say, 10 years. GDP goes up, nominal GDP goes up. The standards of living of the average American goes down, or of the average European. I'm not talking about the 1% at the top of the pyramid, of wealth pyramid. Money printing, monetary inflation benefits some people and hurts the majority.
Yeah.
And the people don't realize initially the monetary inflation, the negative sides, but they wake up when things become unaffordable. Like young people, the affordability to buy homes is at the lowest ever in the US, at the lowest ever. It's in a way a tragic occurrence, because you would think that the money printing would make things affordable. No, the opposite happens. Of course, there has been this monetary inflation, and the purchasing power of money has gone down steeply. Yesterday, a lady gave me the menu list, the first menu list of McDonald's.
Well, it's probably cheaper than the Hyatt that we're in now.
Yes, that I assure you.
Yeah.
So the paper money has lost its purchasing power. That everybody agrees. How much it's lost is not entirely clear.
Right.
This is the problem with monetary inflation, because you have to adjust everything. Say, I have a deposit $1,000 in 1970, but if you and I put that $1,000 on deposit, during the 70s we had returns of sometimes 20% interest per annum. So that $1,000 has grown into a few $1,000s. So I'd argue it lost purchasing power, but not as much as one would think.
While gold's recent dip reflects market reactions to a stronger dollar and political developments, the potential for long-term gains remains compelling. Economic factors like tariff policies and inflationary pressures could support demand for gold as a hedge, particularly if future monetary adjustments shift investor sentiment. For those considering precious metals, the current market conditions may offer opportunities amid cautious optimism. How might protectionist policies and inflationary risks shape investor sentiment toward gold in the coming months? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.